we going local? So that's interesting. One company only internationally. Reflects in a way the size and scale of this. We can talk next about Mondi, which is dual listed on the JSE and the London Stock Exchange, LON code MNDI, but we will look at the local one. You've got to add the two together. It's got a dual structure, same as Vestact. It's been a fantastically successful company, gone a little bit sideways since then, but to be fair, it's because it reports in euros and it trades in London. It's done well there, but not here. Market cap 145.5 billion rands, PE ratio 16.44. Dividend yield 2.66. Let's put up the rand share price. So that's what I mean, done really, really well, and then since then gone sideways, just thanks really in a way to the euro, rand, pound,
yes,
rand.
because this is largely a sort of one of these large cap industrial rand hedge stocks, and it did very well as the rand declined, actually been quite good to hold on to its gains and move sideways, notwithstanding how much the rand has strengthened. And really this came out of the Anglo stable, and as an independent business has been very successful. I think under a very able management team under David Hathorn, actually based in Melrose Arch, interestingly enough.
But most of the business international.
That's right, yes.
Tremendous.
But there is a change of leadership taking place where the head of
tell me, Peter Oswald, the incoming CEO, he's been there a long time, but is he South African or foreign?
No, he's Austrian as far as I understand. But I think what's important, I think you may see where there has been sort of more of a South African element to it, South African-based management team, the centre moving more to London now and really following the
But they really do have global operations, very strong in containerboard and kraft paper. That's that sort of brown paper which gets used in packaging, sometimes has a waxed side to it which is used for other sorts of applications. Done lots of deals and always seem to be able to buy things and then turn them to good effect.
Yeah, so this is where management has been very good at managing the portfolio. So they have been making a lot of smaller acquisitions in the consumer packaging business and growing that part of the business, diversifying a bit away from the pure commodity businesses. So,
although having said that, they bought well in the commoditized end as well. They seem to, for example, buy assets in like Russia and Eastern Europe where they had cheap forests and plants which could be made more efficient quite easily.
Yes, and that's really been the other part of their business. They've been deploying their capex into improvement projects inside these plants and really energy recovery, slight capacity expansion, and they've been basically achieving or exceeding their cost of capital, and really that's been driving the return on equity. So they've got a very attractive return on equity of over 20%.
Okay, so like I said earlier, the London listing, if you look at that chart, it's just been one way up, and people of course like companies like that. It reports in euros, so there's that benefit. I suppose there might be some residual concern that if Europe has a bit of a quiet patch thanks to, you know, Brexit and related uncertainties. But how are you going to call it now? Do you see it as hot or not?
I mean, I think they're well diversified, both by product line category as also regions. It's a sort of mix between developed markets and developing markets with that Eastern European and South Africa. We still like it. We think it's a very good, well-run business, quality team, and has reasonable prospects, so hot.
And there could be some currency-related benefits too. Okay, we're going to go hot on that one.